On to markets now. Asian markets gave up their general gains from yesterday. That's despite a positive run on U.S. markets overnight. The theme around the world economy potentially going into recession appeared to dominate investors' thinking today. This also comes ahead of Fed Chairman Jerome Powell making representations on policy and economic growth expectations to Congress today. The Nikkei share average in Japan declined by 0.37%. Over in Hong Kong, the Hang Seng Index tumbled by 2.56%. While mainland China was also under pressure, with the Shanghai Composite Index falling by 1.2%. In the US, markets bounced back following a national holiday on Monday. Today, market players will be keeping a close eye on the Fed Reserve's chair's comments to Congress later. The Dow Jones Industrial Average closed up 2.1%. The S&P 500 rose by 2.45%, while the tech-heavy Nasdaq closed up 2.5%. Let's take a look at the indicators. Well, to expand on the markets for us, I'm joined by Carmen Beluane. She's the portfolio manager at ABSA Asset Management. Thank you very much, Carmen, for joining us. I suppose all eyes are going to be on the comments that come from the Fed chair later today.
Yeah, I think we're going to be listening for the next 48 hours as he presents. Lots of concern around how hawkish his comments are going to be. He's going to give a statement surrounding the health of the economy. And unfortunately, as it stands, inflation in the US came out a lot higher than expected a few weeks ago. And so the market at this point has priced in a 75 bips increase for a second time in July. And concern will be around whether this is enough and how fast the Fed will be tightening going forward.
Why do you think that the Asian markets couldn't hold their gains today? And why are we so spectacularly low on the JSE as well? I mean, is it really this whole issue of higher inflation?
It's definitely the key concern at the moment is around what the impact of high inflation is going to be, specifically on growth as we try to come out of the pandemic overhang. However, having said that, the US #1 was closed yesterday for a long weekend. Not yesterday, sorry, on Monday. And then also we are definitely seeing the return to risk off in terms of concerns around recession across the globe.
We seem to be very driven on our local market by global factors. In the United States, when inflation comes out, it's a big hoo-ha. It's not always the case here locally, but of course, the inflation number jumping quite substantially, the consumer price index rising by 6.5% for May. That's compared to 5.9% in April year on year. What sort of impact did that have on the rand, if any?
So at the time of the announcement, the rand did breach the 16 rand to the dollar level. It has come off slightly from there, but remains weaker today. A lot of that, obviously, as we know, is coming from the impact of Russia's invasion of Ukraine, and that has had a significant impact on the oil price, #1, and therefore fuel costs and transport costs, as well as cooking oil. So if we had to strip out the impact of fuel inflation, you would have gotten a number of about 5.1% compared to the actual 6.5. So quite a significant impact in terms of that, giving us a 5-year high for this inflation level.
So in this very volatile market environment, what's the best investor approach right now? It's too late to try and sell off because so much value has been lost. So what do you do?
I think the key thing is don't panic. It's too late to panic now, as you've said, and more in terms of long-term or medium-term to focus on those companies that are able to withstand this high inflation environment. So those that have pricing power, #1. #2, those that have low leverage, so are not going to see a huge impact from a rising interest rate across the globe and specifically in South Africa. And #3, most probably those companies that are focused or strong cash generative companies, specifically through recessionary times. So all in all, quality companies, and those, in my opinion, should be what we should be focusing on.
And if we can look at a company stock, the tertiary group Stadio, they came out with an update on their performance. Any key takeaways on their performance?
Yeah, so the CEO has mentioned that they will continue to focus on growth, looking for growth avenues, probably not in their general portfolio. We know that they are focused on higher education at the moment and have a student contingent of over 35,000 at last print. The focus there is definitely, as they've mentioned, going to be on making sure that most of their students are focused on online learning compared to contact or physical contact. So the ratio is going to be about 80 to 20. They're looking to continue to grow their students as well, getting to about 100,000, and that print they're expecting in 2026.
And then lastly, I mean, we're on some visuals of people shopping. What do you expect the Reserve Bank to do in terms of interest rates next month in July?
I know what I'd want to do as a consumer, but unfortunately, that's not what's going to happen. We have now breached the Reserve Bank target range of 3 to 6%. So it's definitely going to be about how hawkish they are. There is a delicate balance between increasing interest rates and ensuring that economic recovery continues. And that still remains very fragile. So I expect there's likely to be at least a 25 bips, but maybe possibly a 50 bips as well.
All right. Thanks very much, Carmen, for your time and your insights there. Carmen Mpelwane, she's a portfolio manager at ABSA Asset Management. We'll have more news for you.